everybody? It's your boy, Coach UV, and this is the Unique Trading Group. Welcome to the channel. I tell you, I really do appreciate you clicking on this video tonight, all right? I got a special video for you. I promise not to try to keep you too long. It's going to be a valuable video packed with information, such as the SPY. We're going to talk about the bond market, the TOT, the VIX, the Fear and Greed Index, and also we're going to talk about gold and the PCE, the put call ratio. Why not? You know, a little bit of gold, a little bit of put call ratio. Let's see where those buyers are. Let's see where the money is. All right. So stick around. It's going to be a really good video. We're going to get into some economic data. And for those who are watching the first time, this is the Unique Trading Group, where strategy meets mindset and discipline turns into the income. Here at the Unique Trading Group, we focus on market structure and price action in a very unique way, because the market is unique in our humble opinion. Shout out to Mark Douglas. And we want to welcome you to the channel. All right. We are talking about the SPY again. If you want to join a great community, the link is down below in the description. All right. I also have a beginner section for those who are beginners, but this channel is for beginners, intermediate people, and also advanced traders alike. All right. So let's hop into the economic data. All right. It's economic data released every week, Monday through Friday, unless there's a holiday or there's no major news. And then this comes out and it affects price. This is the Forex Factory website, and we have information that is released that affects certain markets. All right. It could be commodities. It could be Forex futures market. It could be options, stocks. All right. And when this data is released, it's about inflation and recession fears and interest rates and unemployment claims. And that data also affects business, right? How much can they buy products for? You know, how cheap is it? You know, and what are their returns on their business? All of this data is released in certain metrics every week, and this affects the certain stocks you like to trade. For instance, for me, it'll be the SPY, which is what we're going to be talking about today, giving you some guidance on price and what I might think happen. Again, this is Monday's Madness. All right. Last week was Monday Madness Part 1. This is episode 2 of Monday's Madness. So we're going to get right into it. All right. On the charts. All right. Tomorrow we have some hot red star folder news that's going to be coming out. Anytime you see this red folder, it's going to be affecting price. All right. Specifically SPY. Okay. So this is going to be before the market opens. So we never know what kind of wild swings we could get. All right, before market opens. But don't worry, I got you covered. We're going to be prepared for both scenarios. That's what it's about. All right, being disciplined and rich to reward. All right, 8:30 unemployment claims. We have some more things coming out later on that day. All right, and that is for Friday. This is Wednesday, April 16th. This is the 15th. All right, which will be tomorrow. All right, tomorrow we're going to have the CPI data that's going to be coming out. All right, we also have some more people speaking, of course, and some more information coming out later on in the day. Wednesday, we have some more hot red star folder news. All right, before the market opens and during market open. All right, then we have some people speaking. All right, we have a press conference. And again, we have Fed Chair Powell is going to be speaking at 1:30. Red star folder news on Wednesday. Remember that date. You know, anytime we get these red stars during the market, after the market, pre-market, it always affects price in a major way. You get these big moves in the market. Okay, so we want to be ahead. We want to know what time they come out so we can react to the price action we're going to see on the charts. Okay, Thursday we have more news. All right, more red star hot information that's coming out. All right, this data hot. All right, Friday's a bank holiday. We might have a short week this week, guys. All right, so let's go ahead and rock with the SPY chart. I have some notes for you. Get your pen, get your paper, get your notebook. All right, I'm going to give you some clear details. All right, I'm going to be focusing on the opening and the close, a couple of patterns, sentiment, right? And so you guys can grasp this whole thing. And take your time. You know, if it's your first time watching, or even if you watched before, sometimes this information I know could be a lot to digest. So take your time. You might need to rewind the video or watch it multiple times in order to really grab some of the things that I'm saying. And if you have any questions about any terms that I'm using, leave me a comment below. All right, feel free to ask. Don't be afraid. We are here for you. All right, the Unique Trading Group. This is where strategy meets mindset, and discipline turns into income. All right, hope you guys are ready and got your notes ready. All right, here we go. SPY 4-hour time frame. All right, this is Monday Madness, episode 2. All right, we had some wild swings in this tariff Trump market. Okay, and as you can see in front of me, all right, we have a W shape, bullish structure, a bullish pattern rather. All right, we're making higher lows, higher high, but we haven't made a higher low yet. All right, in a compression pattern we are waiting to see. All right, and we have earnings this week. It's earnings season. All right, every 3 months, the following month after that, we have earnings. These companies like Apple, Amazon, all right, Google, USPS, UPS, they all have to report their earnings to let the government know, and IRS, those guys, let them know how much money that they made from their business. All right, they have to report that, and based on those reports, the sentiment drives to certain traders like you and me. Yes, you listening. All right, people with money, people with no money, people trying to get into the game of investing. They watch these metrics. All right, and if a company is good, they tend to like to buy. They like to buy more shares to get dividends. Shares being a piece of a company, you can buy a piece of it bit by bit, right? And as it grows and as their price grows over time, you make money off of the money you invested. It's interest off of your money. All right, that's a real thing. All right, and so we have that coming out, and so some of these things can affect price and make SPY stay in a certain area until that information is released. Same thing goes with forexfactory.com, where that data is released, those red star hot folder moments. All right, okay, so you ready? Here we go. SPY, first note, previous close is at 533.94. All right, that happened on the 11th of April. Previous close is 533.94. You can write this down or you can screenshot it. All right, today's close is 539.12. all right, that was today's close, and we are currently below that close. All right, if you've been trading with me for a while, all right, you know this, and if you didn't, now you will know for the first time. All right, this is an A+ setup. When price is below a closing price, that's more bearish. It means to the downside. You want to be looking for price to drop more. Even if it pop up a little bit, you want to know the majority of the day, if it's below the closing price of the previous day, you're going to have momentum to the downside. And the vice versa. If you have a opening price that opens up above the closing price, that's bullish momentum to the upside. You want to trade to the upside. Look for momentum to the upside. Even when it drops, you want to still buy the dip and go to the upside. All right, okay. And so this number is important. 539.12 is the closing price, and we are below that right now. So we are bearish on a smaller scale until we are above these highs here. 544, that was today's open. All right, that's the number we were just talking about. It's in tangent with the closing price. Today it opened up at 545 and it closed at 539.12. All right, if price breaches back to 544, it will be a decision moment for the SPY to return bullish, to follow through back to 545 and above, 550, or will it act as another place of resistance because now we are below these numbers. We are now previously below the closing of the day. So we're probably at 538, 537 at the time of this recording. Okay, 2 hours after the market closed. All right, this is Monday's Madness. Monday Madness episode 2. All right, stick with me. All right, 533.86 is today's low on SPY. All right, if this number is breached and it holds as a resistance, a wall, and it can't get past it, all right, if it breaks below it and can't get back above it, I want to look for a put entry to the downside. All right, but if it holds at 533, I want to look for demand. What is demand? I'm looking for price. Let me squeeze this chart out for people who are watching. All right, like right here is a place of demand. Price found discovery of price, and we're going to the upside. So we found a floor. All right, and we're buying the market to the upside. Okay, that's demand here. Okay, now the reason why I say 533, even though we're not there anymore, because we're thinking ahead. We're subjectively thinking, if we're below the closing price right now and we fall, we could wake up in the morning and the price could be way down here. We could wake up and can shoot up towards the upside. We don't know that yet, but we're preparing for both sides, meaning we know the scenarios. If price is down here when we wake up, then we can't trade these levels that we're giving out because it's been broken. Now we have a new set of numbers, so we have to react. We don't want to maybe try to sell when price gets down here. Maybe we want to look to go back to the upside, okay? Just like right here, this is a scenario, the mindset of a trader, being able to adjust. Okay, if we break below 533, okay, which is around right here, all right here, this purple line, all right, and this purple line is significant. I'll get into the details of that in a few seconds, okay, a few minutes, but that's significant. All right, that 533 right here, okay, if we get below that, we could drop down. Okay, that's 533. All right, that's the bottom of this range. Let me bring this up. Okay, spread it out a little bit for those who are watching. We're talking about this candle here, all right, this red candle right here. All right, that 533 is pretty much the bottom of this candle. All right, the bottom. I want to look for price to be accepted here for me to continue to the upside. If it falls below, I want to look for bearish pressure back to the downside. Okay, all right, the low of this candle was 509. The next level is 520, and the 21 SMA, which is my gray line, is 528. All right, so we could possibly fall to 528. Remember that I said that. All right, and that's what you want to look for. Okay, all right. Now, if we wake up in the morning and we are above these levels, okay, 544, that open, today's open, this is a place where I want to buy calls for a breakout trade to the upside. A breakout trade to the upside, 544. We could stay within this range, but if we fall below the range, which is at 533, all right, and that low is actually 535.36. So write that down. 535.36 on a 4-hour time frame is the last bottom range of this current candle. It is the bottom range of the current candle of the 4-hour. That bottom range represents 535.36. Write that down, 535.36 tomorrow. If that number breaches and falls tomorrow, I want to look for puts to the downside to retrace to 533. That's a 10-point move. Okay, I'm sorry, a 2 to 3 point move. I'm sorry about that. Now, if we are below this point of control, all right, this purple line, the 533.86, 533.50, today's low. If we are below it in the morning, I want to be reacting and watching to see what's going to happen. All right, I like risk to reward. I don't like small trades. I want to look for a bounce for continuation to the upside or failure here to go to the downside. That's the kind of trade I want to look for. All right, on the 4-hour and a 30-minute combo. All right, now this purple line I said I would talk about. All right, this is called the volume point of control. I'm gonna move this purple line so you can see it. All right, this red line is a point of control. These blue and gold bars are the volume profile. Okay, and so this represents the point of control at 533, same area. Okay, if price bounces from here, this is where majority of the buyers are, at 533. And so the point of control, the volume profile, is a future forward thinking indicator. It's not a lagging indicator, like this 21 EMA, exponential moving average. That's what EMA stands for. This is a moving average, a 21 moving average. That means for the past 21 days, it's giving me an average price. All right, this is more so of a lagging indicator. Many traders use it. All right, I use it. I don't use a lot of moving averages, but I do use a 21 on my TradingView account. And I like the way I use it. All right, if it's above, I like calls. All right, I mean, I'm trading to the upside, and if it's below it, like right here, high probability edge, I like to trade the rejection off of it back to the downside. Okay, and sometimes it acts like a magnet where price wants to retrace back to, which brings me to a ironic point. That retracement back to the 21 is at 529. Okay, remember the point of control is at 533. We'll make that a red line. All right, if it falls back below, we could target the 21 at 529. Okay, if you make it a green line, just to give you a psyche in your mind of it could bounce and go back up here, because it did on this candle. It bounced and went back up, right? It could bounce here at that 533. So these are reaction moments for you. Okay, this is what you are to look for. Okay, this is also a couple handle trying to form. All right, I thought that today it would form, but it didn't form from the previous comments that I made. All right, but we are still making upward momentum. We didn't get that burst to the upside like a lot of people are looking for, but keep in mind we have data and earnings and uncertainty with this news that's coming out every day, and so this is going to affect price. All right, just remember that. Okay, so this is what I want you guys to look for. Now remember, the TLT bond market is a safe haven for the market. When people are afraid and recession fears, they want to do some insurance. When it's uncertainty in the market, or inflation, we want to use these as a way to come in and use it as a safe haven for when the SPY in the market is falling and the TLT is rising. When this goes up, SPY goes down. All right, I'll talk about this a lot. Check out the TLT if this is your first time, the 20-year plus year Treasury yield bond. When it goes up, SPY goes down. Do your homework on that, all right? All right, I want to look at the VIX. The VIX is also trying to head back down a little bit, but it's finding a little bit of place of demand here, like maybe slowing up and want to go to the upside, but it is still making bearish momentum. The VIX is a fear gauge. When more people are buying puts on the market, I mean SPY, that major chart we're looking at, the SPY, when it goes down, people bet. It's a put option. They sell the market down, PUT, all right? And when that happens, the VIX goes up. When this is going down, more people are optimistic about the market, and we're going up. It makes sense because now the VIX is going down. More people are optimistic about SPY, and that's why this is going up a little bit. You with me? Okay? And so we still are to watch certain levels tomorrow when we wake up because we don't know what's going to happen. We got to react. We got to react. Take a screenshot of this if you need to. All right? Now, gold is the last but not least chart we're going to look at as far as a commodity. I am bullish on gold. Gold has been on a major run. Of course, there's always pullbacks. But gold has been on a crazy run, and even though this is the 15-minute time frame, you can still see. Bear with me as I navigate the screen. Seems like we want to freeze a little bit. I appreciate you guys rocking with me thus far this whole time, and I hope that I'm bringing you some value. If you have any questions about anything, please feel free to leave a comment below to let me know, and I'll do a video, how-to videos on anything that you're looking for. Okay, right here we have gold. All right, as you can see, we've been running on gold. Okay, gold has been running up ever since SPY has been falling down. All right, it's been running up. It could be a place of profit taking, or it could be just a little breather, you know, small minimum profit taking before continuation back to the upside. All right, always better to check the higher time frames. All right, for the macro view. Macro and micro. Macro meaning huger, bigger time frame, a bigger outlook on price over time, bigger outlook on business over time, macro, and micro being small. What are the smaller moves over time? What is happening on a smaller spectrum? All right, over time, what adjustments need to be made? You with me? All right, and that is gold. Last but not least, this is the put call ratio. This is a market eternal. A market eternal. It's telling me how many people are betting that the market is going to fall and how many are thinking that it's going to go up. All right, and I won't go into the details with this number right now, but this is the PCE, the put call ratio. P stand for put, C stand for call. It's a ratio. All right, and as long as it's above a certain number, it's letting me know that more people are going to stay selling the market right now, which would make sense. It's above my 21. Okay, it's the inverse of the SPY for me. The market is dropping while the PCE is going up. More people are loading up to sell the market as of right now, but we could go up a little bit and bounce and fall back down. Now, this is important. This is important. Keep this in mind. This move here on the PCE, when this move happened right here, price rejected here and fell, we rallied aggressively on the SPY. And I mentioned this previously in my Monday's Madness video from last week. Monday Madness. Okay, Monday Madness. Check out that link. All right. And I talked about this aggressive move that I predicted that we got. All right. This put call ratio number failed. That means more people were less bearish. They were less pessimistic and more optimistic about the market. And when people are optimistic, the market goes up. All right. That's the sentiment. All right. All right. And so now we're getting back to try to go to these levels. All right. As it was going up, we were following an SPY. And the people took their profits from that. See those two things happening at one time? Hey, man, this does not have to be hard. Okay. All right. Now, that's all I have for you thus far. I have a trading options book for you guys if you want to check that out. That is in a link below. All right. The Power of Patience. Mastering emotions and trading while turning discipline into income. All right. And this has been an episode of Monday Madness, episode 2 of Monday Madness in the series that I started. All right. If you enjoyed this video at all, if you found any value in anything that I said, please do me a favor. Hit the like. We want to try to get the like up to 100 likes. All right. And we want to share this video with as much people as you can that you think it could help in the future, along with any of my future videos. So hit the subscribe button, hit that bell so you can be notified of any valuable videos. And again, guys, thanks for watching. Until the next time, peace.